Hello everyone. Today we're going to talk about something that relates to business types, which is the topic we're in the midst of right now. If you've been paying attention, you know we covered 3 different types of businesses. Number 1 is a sole proprietorship, which is a business that's owned by one person. Number 2 is a partnership, which is a business that's co-owned by 2 or more people. And then the third kind is a corporation, which is a business that's owned by a group of people we call stockholders, which are simply people who have paid money to be given ownership over this type of business, corporation. So today what we're going to talk about is what a business does business for, and that's to make money. They sell their products, they provide their services, they get paid, and they hope that at the end of the day they walk away with a profit rather than a loss. So to get into this, let's jump into it. You should have a little teeny tiny half sheet of paper. It looks a bit like this. On one side there's lots of empty space with some words or whatever, and on the other side there's some you're going to see some other charts and things. We're going to start on this side with some space here for some definitions. So let's jump into this, shall we? What we're going to see is that there's a lot of terms, just like everything in economics. And so the first term we need to define, and you can put this in your first row where it says definition under total revenue, is total revenue. So total revenue is just the money that a business makes by selling goods and services. If you want to write that down, you can pause the video and copy it over, or just write it down as I'm talking. And so here's an example. If I am Apple and I make iPhones, and let's say I sell 5 iPhones and I charge $300 a piece. 5 times 300, which is the price of the good times how many I've sold, or the quantity, is going to tell me what my total revenue is. And so that'd be $1,500. There's your formula for that. So here's the thing. On your half sheet, you've got your definition. Now where it says abbreviation, write TR for total revenue. And where it says formula, you want to write this TR equals price times Q. I'm going to write that on the board behind me if I can find a marker. Here we go. So total revenue is price times Q, or the quantity. So with this simple formula, now we can find the total revenue for any product made by any company. Looks pretty good. Okay, let's keep going because there's a lot more to learn. The second term you need to know is total cost. Total cost, here's your definition. It's the money you have to spend to produce goods and services. So for instance, if I'm Apple and I make those 5 iPhones, well, those didn't just appear out of thin air. I had to build those. I had to pay factory workers to assemble them. That cost me money. And so if each iPhone cost me $200 to make, well, then my total cost would be $1,000. And obviously the way you find that is by taking the average cost of each individual good you've produced and multiplying that times the quantity of the good, meaning the number of products that you've made, or the units. So that's another term, by the way, average cost. Before we define total cost further, let's talk about average cost. Average cost is just the cost on average of each good. So what you could see is that you have a total cost. So to make all 5 iPhones, it cost me $1,000. Well, to figure out what your average cost is, you simply take that total cost amount and you divide it by the quantity. So anyways, here's your formula. So total cost, your abbreviation there is TC, and your formula there is here. I'll write it on the board. It's AC times Q, average cost times quantity. Okay. Your average cost, which is your abbreviation, well, AC is the abbreviation. I'm not doing a very good job here. Is the total cost divided by the quantity. So again, if I'm like, hey, I just made a bunch of chicken nuggets and I have to spend $50, but I made 10 chicken nuggets, so you would say the average cost 50 divided by 10. I must have spent $5 per chicken nugget. So that's all we do with that. Okay. Really, if you've got these definitions written down, you can use them really fine. Okay, now let's move on to the last thing. And this is the most important thing. The businesses who keep track of these things want to know, so did we make money or did we lose money? And to figure that out, you need to know the terms. First of all, what's a profit? A profit is the revenue, the money left over after all your costs have been paid. So with Apple again, let's look at just one iPhone. If they had to spend $200 to make one iPhone, but then they got to turn around and sell it for $300, well, obviously they made $100 extra. That'd be $100 profit per phone. Now, at the same time, some businesses don't make profit, and it stinks. They fail, essentially, when this happens. We call it a loss. And losses are when total revenue is less than your total cost. In other words, you've spent more than you earned on your products. So let's use an example. Let's talk about Nike, which this is just a made-up scenario. It's not like this actually happened to Nike, but just pretend. Let's say Nike has total revenue of $250,000, but they spent total cost of $300,000. They would have a loss of $50,000 in that situation. And if that goes on for very long, they'll probably fail, and that's not a good sign. So the way you find these things are simply by doing some simple subtraction. You have to take your total revenue minus your total cost, and that will give you your profit or your loss. And if it's a positive number, we call it a profit. If it's a negative number, we call it a loss. So let me go ahead and write that down on the board. So profit or loss is total revenue minus total cost. Now be careful, because this P/L, it's not like profit divided by loss. This is just like profit or loss. I hope that makes sense. But hopefully you already knew that. So there you have it. Now you've got these formulas, let's do a simple example. So follow along. What if instead of doing economics tomorrow, I said that we were all going to come to class and make some blenders? Because what's better than having economics other than like blenders? I can't think of anything better than that, so it's got to be blenders. Okay, now let's say we made 40 blenders and we sold them to kids in the hallway for $25 each, and we wanted to know what our total revenue was. First thing, we have to use this formula. The total revenue equals the price times the quantity. So let's see what this turns out to be. So we've got that formula. Total revenue is price times quantity. So if we use the numbers here, that's the $25 was our price, 40 is our quantity. So 25 times 40 is $1,000, which is great. We just made $1,000. But does that mean we get to keep $1,000? Not necessarily, because that isn't our profit. That's just our total revenue. So let's keep going. We need to calculate our total cost. So to do that, we need the second formula. Total cost is average cost times quantity. So let's go ahead and see what that ends up being. So there's our formula. So our average cost, it says here, it says each blender costs us $10 to make. That's average cost. And quantity is still 40. It's the same 40 blenders we talked about up there. So that'd be 10 times 40. So our total cost comes out to be $400. So now some simple subtraction, and we can calculate our profit or loss. We want to use this last formula, total revenue minus total cost. And so we set our total revenue up here was $1,000. Our total cost is $400. So 1,000 minus 400 means that we ended up with a positive $600. That's a profit, which is good news. So I'll keep about 50% of that, and you guys can have the rest of it between yourselves. How about that? Does that sound fair? Maybe not. Okay. So there you have it. Just to recap, these are the formulas. We want to know how much money did we earn, how much money did we spend, and when we do some simple math, we can figure out if that was good for us and we walked away having a profit, or if we ended up spending too much and having a loss. So here's the last thing you're going to do. On the back of your half sheet are these little scenarios. So there are 4 scenarios, and in each one you need to calculate every single thing we just talked about. The person's total revenue, total cost, average cost, and then their profit or loss. Now be careful, because these are kind of difficult, okay? And so what I want you to do is take some time, work through these. It's a little bit like you got to figure out what you know already, and then what you can use to figure out the next things, yada, yada, yada. But try to work on these, and that's that, okay? Thanks, everybody. See you later.